Hey guys, it's Monday, what is that, November the 16th. This is Michael Holmes here. And what you're here for is because you're looking for business credit success, okay? And what we're going to talk about is why most business people fail when they're attempting to get approvals, when they're going to look for bank loans and those types of things. And why does everybody, the first thing that we do, we look for the banks type loans, right, to go find when we're doing these things, okay? And always what we are brought to you or is with testimonies, right? How did we, or how did they, or how did she get to where they are? Okay, and that's what we want to do. We want to show you things that are actually working, things that are showing people how to get to their end goals, right? How to get from A to Z. And the best way to get there, to stop the failure a lot of times, is if you have enough income with a great business plan, right, then generally you can have a good shot at success. So what we want to do is make sure that you have access to both of those, right? So take a look at this right quick, and we want to show you a quick testimony of how those things work.
Hello, I'm Steve Granados, and I just wanted to thank the Business Finance Suite for helping me out with my business, and it has really helped me build my business credibility. So I wanted to say thank you for that, taking me step by step through the process so I can get some funding as well too. So thank you very much.
So guys, real quick, that's what I wanted to show you guys, that there are people out there that are getting it done. And so what we want to do is we want to jump right into the presentation so that you can see, what business credit looks like for you. Okay. And why is it that, we struggle, and why do they have the old wives' tales out there about how to do what, right? How to get your Dun and Bradstreet. You got people that are charging, sites that are charging for the Dun and Bradstreet number, those types of things. And so what we want to show you is how that you can get yourself in a better place so that you can find out exactly how does this finance work, right? And if you're looking to get more, you want to find out and get into our newsletter, learning how that we do what we do. We give out tips every week, and you can reach us at www.purposepursuer.com/business credit, okay? And once again, that's www.purposepursuer.com/business credit, right? Because we want to get you to a place to where, what do you need to get started? Not only that, but if you need somebody to say, okay, how's that business plan going, right? What are you doing with the effects of COVID, right? How do you insulate against that, just in case that happens, and also, want to recognize the top four vision stealers, right? You want to recognize the inflation. You want to make sure that you have something that is outpacing inflation. You want to make sure that you have the best something against income taxes. Do you have the right strategies to combat income taxes? And what about debt? Do you have the right strategy to get yourself out of debt? Your personal debt, the business debt. Do you have a great way of getting that eliminated? And do you understand the inadequacy of the investments? How does that help with your current and your future lifestyle? Okay, so that's what we want to do. Let's jump into the presentation so that you can see exactly what we're talking about. Okay, now, so there's some people out there, you're looking to do, um, it may be barber, it may be health and wellness. It can be a numerous of different things. It just depends on, what are you willing to gain as education, and then what is it that you're willing to apply. Okay, because everybody has all kinds of books. There's all kinds of seminars and those types of things that people are showing individuals how to do and get to where they want to go. Also, what I want you to know is at the end of this is not something for a pitch or anything like that. This is exactly what you should be looking out for. Okay. And so what we're talking about is, why do most people fail at getting funding? Okay. Because your business is very important to you, your end goal, your purpose. So in order to get that going, we got to have it financed, because SBA says that 9 times out of 10 businesses are failing. All right. So we want to make sure that we can help with that over at the Real University. Okay. Business financing can be a challenge. Okay. Particularly for your startup companies, because your lenders will, kind of be cautious because you're just starting up, right? They want to make sure that you're going to pay back whatever it is that you're borrowing, whatever it is that you're getting ready to undertake as a loan. Okay. So therefore, there are several options for business lending. Most people know what? The banks. Okay, I'm gonna go get myself together. I'm gonna go get this line. Maybe I got good credit. And good credit doesn't always lend to the best type of funding, right? Because funding comes better when you have business. You could get a $5,000 line of credit or loan with your personal, but if that personal is combined with a properly set up business, their EIN or LLC, then you can get a lot better. That 5,000 can be 20,000. Okay, so traditional lenders is just one way. Online lenders, micro lenders, and also the Small Business Association. Okay, so everybody's heard of those things, or you may have heard of one, two, or maybe all four. Okay, so let's look into those. Now, most business owners start looking for a loan for a certain amount, but generally they don't qualify. Because generally, what happens is people put together a business plan, or if they heard Uncle Willie say, you need this amount of money to get started, or they get ready to buy this particular franchise. So they say, hey, I need this amount of money for that. Or they get ready to buy a building. And so they only say, I need that amount of money, okay, without an actual estimate of what we're looking for. Then when you present what you're wanting, only thing that you're presenting is your desire. Okay, you don't have anything backing it, so generally you don't qualify for those. Now, many people are used to thinking of banks just the only place to get money. Okay, now you can be very well educated and still not have heard of the lots of choices for funding, because generally what happens is it's what we are aware of, it's what we've been introduced to, right? Okay. Now, just a short history of your business funding. According to Wikipedia, banking in a primitive form goes back to Mesopotamia. That's 5th century BC. So it's always been something happening, right, in the form of borrowing money to advance yourself in business. Okay. So Wikipedia also says that the oldest bank still in existence is Banca Monte del Pasce de Siena. All right. That's a mouthful, right? But that's over in headquarters in Siena, Italy. Okay, so banks have been around for a while, and what you got to think of is they're in business to do what? They're in business to lend, because if they're not lending, they're not making money on the interest that they're charging. Okay, it says it's been operating since 1472. Okay, continuously. So that's good. It goes to show you a couple of things. Also, Wikipedia also says that the term credit was first used back in the 1520s. So, what we're going through with the rebuilding and the extending of credit and all those different positions, that you hear about credit terminologies, right? It's been back about 5,000 years or so, right? Credit was even used before coins or cash was invented. Okay, because it was a solid way to say, hey, you have demonstrated that you are solid, and so I will extend to you, my credit or cash or whatever that was. Okay, so even Judge George Washington kept a bar tab at Philadelphia City Tavern, according to the Thrillist. Okay, so that's a line of credit essentially. Right. So what's better than a bank loan? What is better than a bank loan, right? There are lots of choices I want you to know about. And as we stated before, we talked about the online lenders, which you may have seen aggressively advertising, Cabbage, Prosper, those types of places, micro lenders, the Small Business Association, but continually. Let's look at the other choices here, okay? Because you have unsecured business financing, you have crowdfunding, you have revenue lending, okay? Then you have angel investors, venture capitalists, factoring, business credit cards, inventory financing. So the list goes on and on and on, So, and then your business credit itself, right? Because there's different ways to factor in what you have as a business in order to make that loanable, if that's a word. Okay. Now, what can a business owner do? In many cases, there are credit cards or lines that can work well instead. Okay. Now, when it comes to down to getting real money, what you want to do is find out what you need the money for, right? For example, if you need 10,000 for office supplies, 10,000 for furniture, 5,000 for computers. So chunk it down and don't try to get down to one set amount. You need to see exactly what you're looking for in totality, right? What's the start? What's the maintaining? What's to keep it going? Okay. You might need to improvise and get funding from a lot of different sources. Just depends on the amount that you're needing. Fortunately, we know of several that can help you. Okay, because the thing is, we go to the individuals to help us to what, lose weight, to gain weight, coaches, those types of things. Okay, and then you go to the bank, and you think the bank is the person like a coach that's going to help you, or the banker. Generally, not, because they're only going to do what the introduce you to the products that's going to be best for them. Okay, so that's what we are here as a real university coach. So strategies for getting your business financing, right? Consider your strengths, right? What is it that you're passionate about, right? What is it that you already have, right? Look at your assets, look at your collateral, right? Do you have good personal credit? Do you have partners? Okay, so maybe you can get a guarantor, or maybe your product is revolutionary, so it actually pushes itself throughout the market without the good financing. Okay, because your idea is enough to find backing. Okay, if you have a revolutionary product. Okay, so, or you might have the gift of being good at lining up other investors, or friends, family that would like to generate other income by backing a great idea or product or service. Okay, so work with your strengths. Now, your online lenders, often the chances of getting financing depend on a combination of a few things. Right. So you want to look at your annual or monthly revenue, your time in business. Okay. Even if you're new, you want to have an estimate. You should have like a profit and loss based upon you moving X amount of things, and what would that cost based upon the expenses that you're going to be using. Okay. And then your time in business, that could be 0 to years. So it's that we have something for either area. Okay, your personal credit score and ability to give a personal guarantee. Sometimes lenders still will want collateral, just depends on what type that we're looking at. Okay, and of course your forms and the fees vary accordingly to which one that you're going to. Just like when you're getting a like a mortgage. Have you ever gotten a mortgage before? Okay, so you would go over to Bank of America. FHA may have a over here at Wells, and may get an FHA at another bank. Okay, so it's three different banks there that you could get a FHA loan, right? But all three of them could have different rates or different structures, okay, or different fees, right? It just depends on which one the bank or broker that we go to. Okay, micro lenders. You can only get a micro loan from a micro lender. A lot of people haven't heard of micro lenders, and you may or may not want to jump in. Just depends on the other strengths that you have. So you want to try the Association for Enterprise Opportunity, and that's at www.microenterpriseworks.org. Okay, pause this if you need to get that, and you can go back and get that website. Okay, and microloan is exactly what it sounds like. It's not a whole lot of money, but yet and still, if you're trying to get going, that's around 500 to 35,000 or so. So it just depends on what you have need for after you chunk down, your assets, your collateral, what things that you're going to need to supply. Okay, then a micro loan could possibly work for you. Now, your SBA, not every company can qualify for Small Business Association loan. Okay, but for those that can, right, there's plenty of you that can, right. Just reach out to me and let me know, what you have, and let's do an analysis so we can see and get you a personal cash flow plan, so that way we can see exactly what you need to do. Okay, because there's a lot of paperwork before you get funding. Right, they have various cap lines, loan programs, and SBA Express. Now, they do not provide the loans. Rather, SBA sets loan guidelines. So therefore, if you meet those guidelines, then therefore you can go to the different banks that do SBA loans. Okay. So their lending partners actually make the loans. The SBA also offers research grants if your company engages in research and development. All right. So what I want you to do, this right here is going to be posted. It's definitely live, as you can see here. And if you're watching the replay, you can also just go back and see, take notes and make sure you get all the different types of things that you need for your business. Okay. And if you see something that you'd like to start, or if you'd like to see how, your business can qualify for what types of loans, then simply hit me up at www.purposepursuer.com/business credit. Okay. And then what you do there, you put your email in, and then we'll be in touch with you. Also, you can text business credit to 805-387-3700. 3639. That's text business credit to 805-387-3639. And we got ways to teach, and we got ways that we can do it ourselves for you. Okay. So let's look at the unsecured business financing. Right. Now, these report to the credit associations, not the personal ones. Okay. So your proof of cash flow or collateral are not needed. Okay, so don't you need to fill out a time or your business requirement, those types of things. All that really matters is your personal credit. Okay, so if you have great credit, and if you need to find out what that is, let me know, and we can look at everything, because the score, it does not always equate to great credit. Also depends on the lines and the trades that you have on there as well. Okay, so you need quality credit with no derogatory reporting. With the 650, you can get personal cards. 680, you can get both business and personal. Okay. And often the big thing is you can have a 0% introductory rate. Okay, for the next 6 to 18 months. That means you're working with money that you have less of a penalty on. It's a 0% penalty, right? Because your interest rate is the penalty that we have to pay back. And then 5 to 21% APR, with 20 to 25% APR for cash advances. So you have to make sure that you're executing your business and you understand what kind of return that you're having. So then you can know the best way to use the cards. And we have the strategies for that as well. We have a cash flow strategist program that can show you, once you get your business up and going, how to plug your now debt that you've gotten for your business to get it paid off the quickest ways possible. Okay. So make sure you talk to us about our cash flow strategies that we can help you with, to make sure that your business not only gets started right with the right finance, with the right financial education. Okay. Now, unsecured business financing, you only pay on what you owe. It's not like a loan. Okay. So if you got $50,000 in the cars and things, right, and you've only used 10,000, so you're only paying back on the 10,000. Okay. So you still got the 40 left. Right. A lending source works to get credit cards for you. Often they can get 5 times what you could, right? Because we have experience in those areas. Generally, this is about 5 to 8 cards, right? They can also get low introductory rates, typically 0% for 6 to 18 months. Now, most sources charge about 9 to 12% success-based fees, which just simply means that, hey, instead of just like a loan, very similar to a loan, like your mortgage loan or anything in that realm. So you pay for your taxes, you pay the mortgage broker, the realtors, their fees, right? So when they help you find money for your business, then you have a 9 to 12% success based fee. That only means that once they help you, like we help you find, let's say for instance, $100,000, okay, then we have a 10% fee upon that, quote unquote, because it depends on your situation. But let's say it's a 10% success based fee. So if we help you find 100,000, then the company charges 10% to do so. So you would net $90,000. Okay. So therefore, instead of you going out and possibly being able to get maybe 20,000 without a fee. Okay. So now you all lenders on all loan programs charge fees. You can easily pay about 5 points or 5% plus, even on an SBA loan as well. Okay. This program, like most others, including SBA, roll in your fee so you don't pay up front. Okay. So therefore, you can get yourself analyzed and find out how much you can get qualified for, receive the money and everything. Okay. Without an upfront fee. So if anybody's charging you upfront fee, come this way. At Real University, we do not charge you an upfront fee to get your thing started. Okay. So also crowdfunding. You probably heard of stuff like the Kickstarter, right? Now but make sure you read the fine print on that, because it takes about 4 to 10% of your donations. Okay. Now, you may have to give all the funding back if you do not make your goal by the campaign's end, also, right? But you can also check on Indiegogo, and they have a flexible funding option, but it costs a little bit more, right? Okay, so straightforward businesses might not do so well in this area right here. Okay, so it just depends on the type of business, the type of financing that we would go after. Now, products which aren't quite on the shelves yet are like artistic endeavors can do pretty good. Okay, because it's based upon the idea. Okay. So, but we talk about that more accordingly to what you have going on. So, securities-based financing, right? So what we're doing with that is you're using existing stocks as leverage to get business financing. You may borrow up to 90% of the value in your stocks. So you can use that to get yourself into a better position. Okay. Now, so you can look at the return based upon your business venture. Okay. So if you believe in yourself and you have a solid return that you're looking at based upon the leverage that your stocks are doing right now. So your stocks maybe have a history of doing 8 to 9% or something like that. Right. And you're saying that, hey, with my business though, I can essentially have a 22%. So therefore, you can see a different way that you want to go there, right? So now you can keep your earning interest on the stocks pledged as collateral, right? So now it's still on the books, closing and funding in less than 3 weeks to do so. Now, 70 to 90% loan to value with rates as low as 1.6%. Right. So basically, they're saying that, hey, however, the amount that you have on there, okay, however amount that you have in your stocks, then there is a loan to that value. Okay, if that value is 100,000, then the loan would be somewhere between 70 to 90,000. That's a 70 to 90% LTV. Okay, loan to value. Okay, so now this is a working capital line of credit, and they will also challenge your personal credit or charge. Okay, it's based upon the personal credit as well. Okay, so they want to see, make sure, that you have a ability to pay back. Okay. Now, angels investors and venture capitalists. This may be an area that you want to dive into. It just depends. And you may be the business that you have may be able to tap into all of these areas. Okay. Now, what is an angel investor? They will typically invest in early stage or startup companies in exchange for a 20 to 25% return on their investment. Okay, so they believe in what you're doing so well that they're investing money, but in return, they want a 20 to 25% return on that particular investment. Angels tend to invest less and also want less control than venture capitalists. Okay. Now, venture capitalists will give money to help the building new startups, which the VCs feel both have high growth and high risk potential. Okay. Now, these could be fast growth companies, but they must have an exit strategy already in place. Okay. So it's up to tens of millions of dollars for investments, networking, and growing your company. Okay, so it's a gamble on the future earnings. They will evaluate what you're doing. Remember how we were talking about the profit and loss statement, how we're going to make a projection. Okay, and so they're looking at those things to see, okay, is this worth the money that we're going to invest, thinking that we're going to get that back. Okay, now, venture capitalists will also often look to recover their investment within a 3 to 5 year time frame. Okay, and they also want a control of your company, if not a controlling stake. Okay, so you got to understand what's at stake here when you are receiving money from angel investors or venture capitalists. Okay. Now, factoring. Now, this is something that maybe truck drivers have heard of. Some people that work with invoices and things like that, because they have a lot of truck drivers who get have the invoices there, but the people that are paying them are kind of moving slow sometimes. So therefore, they can take those invoices that they have, and factor those invoices for a certain percentage. Okay, your company gets a percentage of outstanding invoices fronted to them by the factoring company. The factoring company then goes directly after any company which owed you money, and then they collect on it themselves. So if this person owed you, $1,000, the factoring company takes a percentage of that. They give you 80, 90%, depends on what they have, right? And then they will go and get the remaining after, for themselves. This allows you to extend credit or negotiate longer term payment plans in exchange for other more favorable terms, like getting a retailer on board with your company without holding a bunch of what are essentially IOUs. Okay, for months at a time. So these invoices that you have that people are promising to pay, now you can actually take them and get them factored. Okay, factoring can be very helpful when new companies are trying to establish relationships with their customers. Okay, Business credit cards must be paid up promptly, just like personal credit cards, in and out, right? You want to get within a 3, 6, 12 month time frame, whichever it is. You want to make sure you have an estimate on that. And once again, we have the cash flow strategists that will help you with that process. Okay. If you apply with the SSN, then your personal credit score is also at stake. So you got to make sure, just like anything else, right? You believe in your business. Okay. So if you believe in your business, then therefore you know that you're going to do the proper steps and you're going to have, it's just like you going to a venture capitalist or angel investor to say, hey, believe in me, believe in my product or service or my idea. You're going to be the angel investor for yourself. Okay. And the credit card isn't helping you build the business credit exactly. Okay. So we'll show you how that works and how to make it do so. But sometimes that's the only kind of business credit card you can get, because when you're first starting out, there may be a few things that you're not available to get, okay, that you're not going to be available for you, right? So then your credit utilization, it matters. So what you're looking at is your, let's say for instance, if you have credit cards already, what we call revolving credit cards, right? Revolving accounts. Then that means that you're paying on them time and time again, but your installment accounts are more like the cars. Or exactly like the cars, okay? And then you have the mortgage account. So you have those three different main focuses or main types, okay? But your revolving, it matters if you have a revolving card and it's $10,000 revolving. It matters if you have $2,000 charged versus $9,000 charged. Okay, so if you have $9,000 charged on a $10,000 credit card, then your ratio is very out of whack. Okay, so basically they're looking for you to keep it about 25%, about a quarter of the money. So if it's a $10,000 card, generally no more than 1,500 to 2,500 at the max. Okay, maybe 3,000. Okay. Now, inventory financing. Now, you can use your inventory that you have now, so it must be valued at $500,000 or more, right? And we can show you how to evaluate and get that evaluated. You can get approved for a line of credit for 50% of inventory value. Rates are usually about 5 to 15%, depending on the type that you're looking at, okay? You can get funded about 3 weeks or so. A minimum inventory loan amount is about 150,000. That's the minimum, okay? So, and then your general loan to value is about 50%, like we were saying in the beginning. Okay, so inventory value must be about $300,000 or more. Okay, so it just depends on what you have. I know it says that you have a existence of 500,000, but you can get, there's different companies out there that can work with less. Okay, business credit. This is the big thing, because once you get established with your business credit, you don't have to worry about continuing with the personal credit on and on again. You don't have to worry about any risk of your social security or anything like that. I mean, your social security number, rather. Okay, this is credit in your business's name, not your own. It starts with the company's legitimacy, right? How does everything mesh together? The legal company name, the professional website or email on the same domain, right? Because if it's www.purposepursuer.com, you want to have like a Michael at purposepursuer.com, right? A toll-free number for your 411. Make sure you're listed, and you can find that. We can show you the best way to get yourself listed, right? A professional business address, and what you got to think about too, that a virtual address is acceptable so long as it isn't a PO box or a UPS box. Okay, neither one of those are what you want to use. But like something like the Regis buildings, that's something that works pretty good. Okay. So what you want to do is start with their starter credit. Now they can give you net 30 terms, net 15 terms. It just depends, right? And those terms means that, hey, I'm extending you credit and I'm just giving you 30 days to pay it back. Okay. And what you want to do in building your business credit, you want to pay back before the 30 days, not wait till the 30, pay back on the 25th, 26th day. That gives you the best type of score on your pay debt score, Experian, and those types of things as well. Okay, so you want to work with at least 3 vendors who are going to report to at least one of the credit reporting agencies. Okay, so you want to make sure what you're working with, do they report? And we can help you there. With 10 vendor accounts reporting, you can move on to the better lines. Okay, so you can help you with the gas cards, help you with the small credit cards and stuff like that once you get your vendor accounts reporting. Good business credit will help you get loans in the future. Okay. Now, what we want to do is just a small recap on what was going on, why most people fail at getting funding. It's basically education, financial awareness of what's available to you and what's strengths that you have. Understanding banks are not the only place to get business funding. Viable options also include online lenders, unsecured business financing, business credit cards, inventory financing, and business credit. Okay? Personal credit scores and time in business can also determine which way that you want to go. We can help you with our analysis to get you to a personal cash flow plan so you know exactly what you need to do. Okay? You don't have to put any up of your own money. You can understand how to leverage the different things that you have, right? Personal credit, business credit, the different things that we were talking about previously. Okay? And business credit in particular helps because it builds a foundation, like we were saying, for borrowing in the future. Okay, so that's what we want to do. Our focus is getting your business to off the ground, right? To getting your business to being opposite of the 9 out of 10 that are failing. Okay, so let's get an understanding of what we need to do. Okay. All right. Now, so what I want you to see is that, the biggest thing that you want to do is that during this process, your thing is you got to recognize the top four vision stealers because I see it all the time. I've been in business since I was 18 years old, about 48 now. I've been self employed for almost 20 something years. So I've seen people start and they end up stopping because the biggest thing is not estimating the cost before you begin, not knowing the strengths, the weaknesses, the opportunities, the threats that are out there for your company. What is it, not knowing your target demographic, who it is that you're talking to, right? Not just the people that are around you, not just trying to get the people around you to believe in your vision, your product, and your service, right? You want to get your idea, vision, business idea in front of the right audience. So you want to also make sure personally that you're outpacing inflation, also that you have understood in your personal life how income taxes are the largest bill that you have. Okay, and then the debt. Let's make sure that we have a process of eliminating the debt. These are the top four vision stealers. These are things that go, without noticing and end up sabotaging businesses. Okay, and then the other thing is big businesses. Big businesses have a way of marketing, making you seem like your wants, your desires are needs. You have to do it, right? And so therefore it zaps the money that you would have left over, which you should be investing with for future investments. Okay. All right. So what we want to do is make sure those things are outlined so we can do and be the best us that we can be. Okay. Because what I want you to see is this. Okay. What rate of return should you use for retirement? Right. And see, this is a big conversation. Okay. And as you read here, a small difference in your assumed rate a rate of return can drastically change how much you need to save for retirement. So what you have to do, you have to be able to focus as your business credit is a current lifestyle effect. Then you also got to be considerate of your future lifestyle at the same time. So our goal is to always to help you to get that into an area to make sure that you have everything that you need to do. Right. So we help you with first time home buyers, how to buy and sell real estate, strategies and leasing and for sale by owners, and then also your personal and business credit, business development. So everything in every area that we make sure, and we use the top three solutions. And those solutions are making sure that you don't ever have to worry about what to do next. That's the biggest thing. Okay. What should I do next? And when you're thinking about what to do next, your biggest thing is it takes away from the creativity that you have to expand your business. But when you have a systematic way of approaching life, of approaching your business credit, business financing, and then a systematic way of making sure that your message reach the right market, and then to make sure that you have the financial education to make sure that all the holes that are zapping most people's cash flow, you've plugged those up. You've stopped the inflation. You've stopped the income taxes. You stopped the debt or reducing the debt, right? And you're making sure that you have adequate investing. So that's what we want to make sure that you're doing. And while you're doing that, make sure your first stop is to get yourself a personalized cash flow plan. Understand, okay, we're taking analysis of okay, where do you want to, when do you want to retire? Okay, what day, what year? Okay, how much money do you want to retire with? How much debt do you have now? Okay, so we want to look at those things and then see an analysis on how to take you from step to step. And what are those steps? We're looking at cash flow management, business, and investment income. So those are the three solutions. That's all you need to be focused on. And within the three, we're going to help out with every situation. So cash flow management, you got your budgeting. You have your making sure you have your cash flow in the proper places, right? Making sure that you have understand the difference between income and cash flow, right? And then we go to business income. Why? Because business income is taxed less than your W-2, right? That's what we want. That's what we want to create. If we're going to business credit and business financing that's for our business, then we have to understand how to properly apply the business income and create it in a way that leverages, that creates residual and passive income for us, okay? And then investment income. Let's take care of not just right now, but also create assets that's going to give us an awesome future, okay? So what I want you to do, guys, is hit us up at www.purposepursuer.com, and that's / business credit. Purposepursuer.com, www.purposepursuer.com / business credit. Sign up and get on to our newsletter and get the free information, free value, and say, hey, and you can also text and say, drop a message and say, hey, I'm ready to get my analysis done and find out how I can get my business credit in line. So, guys, I'm going to leave you with this testimony. And this is Michael Holmes with the R.E.A.L University. And R.E.A.L just simply stands for the real you, right? Pursuing your purpose, doing the things that you desire, not another pill, potion, a lotion, wrap, or a tea, unless you want to do so. Guys, I see you on the other side, and that's renewing excellence and advancing leadership. See you again.
My name is Cheryl Reisner with SR Business Resources. I'm located in Shreveport, Louisiana. I was a bank lender in the past, and I thought I knew all about the financing and funding options available for businesses. I even went through the bank loan process when I got ready to purchase an existing business. I found out that the process was very tedious, the paperwork required was extensive, and it took months to complete the whole process. After that experience, I learned that there are a lot of different funding options available for businesses, but most business owners don't know how to get the money. I was very excited to learn about the Business Finance Suite and the process of building business credit for my business where I could get even more money than I could ever get before. I believe that the Business Finance Suite has opened up possibilities for my business in the future that I never could have imagined, and that every business owner can benefit from owning the Business Finance Suite. It will change the way you do business.